Hello, folks, and welcome to today's episode of the Hospitable Hosts podcast. Today, we're inviting on Josh Baldovino. Josh is a real estate investor who juggles multiple roles with remarkable success. By day, he's a marketing manager for a California winery, but his entrepreneurial spirit does not stop there. He has an impressive real estate portfolio, and today he's going to dive into a bit more detail on what he has in his portfolio and also his tips for others starting out with real estate investment. If you like today's episode, please don't forget to like and share to show your support. Thanks. Okay, Josh, thank you so much for joining us today.
Thanks for having me, Miles.
Cool. So you've obviously got a vast wealth of experience with property investment. You've acquired properties through various strategies, BRRRR, wholesale, direct to seller, maybe a couple more I've not mentioned. For you, which strategy has yielded the highest return so far, the highest ROI for you? Why do you think that is?
I mean, and return, I think, is you can slice it in a whole bunch of different ways. And I guess for context, to kind of give the listeners a scope of the portfolio, we started real estate investing 5 years ago. So we have about 8 long-term rentals, own 2 STRs/MTRs, and then we manage 4 more. And then as well as we've co-GP'd on a couple commercial ones. So we've co-GP'd on an apartment in Dallas, as well as an assisted living in Fresno, California. And so it's kind of all just been a snowball effect over the last 5 years. Back to your original question of what's been the most profitable, the best ROI. I mean, if you think of it from a equity standpoint, the BRRRR deals obviously are the best because that's almost 100% return back on your money because you get all your money back out. Although with the STR play, we did also get the best tax write-offs, which means we did one of the crazy cost segregation / bonus depreciation play, which is very different now than it was 4 years ago when I did it. But we got close to $100,000 in tax write-offs. So besides it being profitable and getting that, it varies, and they all work, I guess, is the net answer of it all.
Nice, yeah. That cost segregation piece and the tax piece is something that we definitely, say to people at conferences as well, right? So, like, we were at the BPCon back in October in Cancun, and definitely a few people came up to us that were just doing long-term rentals, and they come and say, SDR is a lot of work. What's the point in doing it, kind of thing? And I think that tax piece is actually a key one. The amount of write-offs that are possible there is a good reason to kind of switch over. But I guess also generally a higher return on STR versus LTR. You'd obviously have to say as well, right?
Yeah, I mean, and I think it really just depends on obviously what you're building, what you're managing, your markets, all of that. But I think largely, as you point to it, it's really how active do you want to be, because it's still active. It is way more active than your long-term rental. And then if we're talking about the spectrum in terms of activeness on the assisted living side, like STR would be 10x more than a long-term rental, and then your assisted living seems like another 10x above an STR. So it's all you're always going to put in work no matter what.
Yeah, of course. So, talking about that work then, and obviously, I think for you, I could imagine it's even more demanding the fact that you've kind of got like multiple strategies and multiple versions of it almost. Like you probably have to switch gear and switch your brain, switch your mindset kind of thing in between the different ones. And you have a full-time job as well, in a marketing agency, if I'm right in saying so.
Yeah, so I mean, I do some marketing consulting on the side. I still have a full-time W-2 job, which is I'm a marketing manager for a winery here in California. So between that and the investments, yes, there are a lot. I mean, I guess the one saving grace is there are a couple deals that I have just my wife and I, just us, and the rest of it is all partnerships. So it's either partnerships or you build out a team to help along with some of the asset management that either I'm not great at or don't want to do. And that's how the partnership is structured for me.
Cool, that makes sense. And so obviously, I assume there's a bunch of tools you use as well to help you stay organized. What are some of the tools and I guess just methods for staying organized between all these different things with partners and your wife as well?
Yeah, I mean, so let's just, if we go through the spectrum of activeness, in terms of long-term rentals, that actually we have property managers for, and all of that we've bought out of state, specifically in the Midwest. And so we've only bought long-term rentals in Columbus, Ohio. We have one property management company that manages that portfolio. So from that side, we'll call that passive-ish. You still have to check in with the manager, of course. On the STR, MTR side, yes, we have been using Hospitable as our main PMS for the last, I want to say like 3 years now or so. We use Price Labs for pricing. And then in terms of other platforms aside from Airbnb or VRBO, we're also on Furnish Finder. And then playing a little bit more with, say, like AI as it comes into even drafting some of the guidebooks for the listings. Some of the responses to guests. It also helps if you do have VAs that manage who maybe English isn't their first language. That is a helpful tool to bring on through. I know that, we play a little around with your guys' Hospitable AI in terms of conversations as well, just to help clean it up. And I even use it too, because sometimes I also just really suck at spelling. So AI is like it's like a one-click spell check for me.
Yeah. Nice. I like that. Yeah, that's smart. Yeah, I think there's obviously uses for everyone there, right? You can always be a little bit better. You can always at least have another look at another way of phrasing something, right? Maybe taking away some of the tension if it's an annoying guest, taking away some of that emotive piece there. So you've obviously quite a diverse portfolio. We've kind of touched on all the different types you have. How comes you have such a diverse portfolio? Was that kind of intentional from the get-go that you wanted to kind of make sure that you had a mixed bag?
No, not at all. It was completely shiny object syndrome. Just leaning into whatever the door was open. So initially we started off with long-term rentals just because I had a buddy who was teaching us along the way as he was building up his BRRRR portfolio. And we said, cool, I want to do BRRRRs too. And again, we started in the middle of COVID. And then at that time, a few months later was the big Airbnb STR boom where everyone only wanted to buy Airbnbs. And we were also one of those fun guys who ended up buying in Joshua Tree. Since then, actually a month ago, we converted that into a long-term rental just because, we were making $100,000 that first year. And since then it's been a slow decline. Luckily, we bought it at a lower price with a lower interest rate so we can still cash flow as a long-term rental. Beside the point. And then, but we're still I'm working on a new STR now, so I don't think the STR market's dead. But as we've met more investors, networked more, just opportunities come into play. And then also with, just changing financial markets with interest rates up, property houses and valuations up higher too. It's a different market to cash flow in than it was 5 years ago. So I think if you only stick to one play, it'll probably be very tough for you to find deals. And so you have to continually just figure out, okay, which one is the least risky for whatever risk means to you.
Yeah, that makes sense. Cool. Interesting. So just kind of going back to you being a marketing manager, interesting that it's for vineyards. I feel like there's, I don't know, some similarities there, I guess, in some degree of welcoming guests, but then also, very different industries. How do you find that your marketing knowledge and, your marketing profession equates into kind of your short-term rental, long-term rental, your property portfolio? Are you able to use some of your knowledge from that background in order to help grow your business? Grow the number of guests that you get booking your SDRs?
Yeah, totally. And I'd say slightly with the bookings, maybe, but really, so my day job is national print, digital advertising for the winery, and not so much the hospitality side. Granted, I do also help with influencer buys and things like that to get people to visit the tasting room. So there's that knowledge. And if you're making content about visiting your STR, then yes, it is helpful. For example, as we were building out the listings, I knew, well, one, I also know how to take those bracketed exposures for real estate photos in general. So as we're vetting other photographers, it makes it way easier for me to say that's a good photographer versus a bad photographer. And photos and listings and how to stage it is everything. And so you definitely have to have the right vendor to do that. But actually, I think the biggest help that marketing has been for me has not necessarily been more listings, more bookings, but it's actually been the partnership side. So as I go to these different events, especially me being in the Bay Area, everyone's in tech. Everyone's like a software engineer or product manager. and not there's very little who specialize in advertising or marketing and social media. And especially in this age of, hey, let's do personal branding, let's do this, let's do that on social, on Facebook, Instagram. Being able to add value to individuals in that sense has opened up way, like, just so many different partnerships that allowed me to get into all of these different deals in the amount of effort that I would want to be in. So that to me has actually been the biggest play of the marketing side, not necessarily the hard skill set itself.
That makes sense. And then I'd love to kind of get into. I think you started talking about there some I guess important things to consider and important skills to bring to investments and short-term rentals specifically. What are some of the things that you would kind of give as guidance to someone just starting out their property investment portfolio? Where do they begin? What are some of the key things that they should be thinking about?
Yeah, there's really only two things that I ever tell people to do when they're first starting off, because shiny objects is real, and you actually won't know until you like get into the weeds of it. So yes, it's ideal. Let's just pick that one thing and go that one way, but it's hard. Like, that's why my portfolio is the way that it is, because I didn't do that. But the advice that I always tell people is, whatever nest egg you have to invest, first spend half of that. So if you have $100,000 saved up and you're going to invest that, then only spend 50. So that way you have 50 of a oopsies budget. So whatever needs to happen extra, you feel confident and it doesn't, break the bank. So that's number one. And then number two is to whatever asset class you're thinking about, whether it be long-term, STR, commercial, etc. You have to put in a lot of reps to run numbers, to meet other operators, to talk to lenders. And if you're not willing to analyze hundreds of deals, network with, try and get to 100 people who are actually managing or operating that asset class first, just to chat with. And if you're not willing to put in that work, then I wouldn't do it at all. Because you want to at least meet and have that many conversations before you ever do anything. At least I needed to do that.
Yeah, that's, I think, a fantastic tip as well. Really kind of do your research, right? You can't just go diving into this thing without the background knowledge, right? Hopefully, this podcast is a starting point. You need to kind of delve deeper and find other hosts that are already out there that you can learn from too.
Yeah, cool. If I could add just like one tactical piece. So on that, like, to say my own advice, when I was first getting into, say, a BRRRR deal, and we closed it with hard money, never having done a deal before, which means, yes, we paid 14% interest and we were willing to, which at the time sounded ridiculous to me. Like, I understand it in concept, but I was like, man, that's still a lot of interest. Back when interest rates were like 3%. So the delta was crazy. But I remember for our first BRRRR deal, we called over 50 hard money lenders. And by the 50th conversation, they're like, are you sure you've never done a deal before? Because I knew exactly what they were going to ask. I knew exactly how to pitch the deal. I mean, the same for analyzing an STR. We analyzed 198 STR properties before we closed on that first Joshua Tree one. And I have that all on a spreadsheet, so wow. I know exactly what it worked, what the offer was all the way through the stage. But you got to put in the reps.
Yeah, that's impressive. Nice. Cool. So just kind of moving on, we already kind of touched a bit on Hospitable. Obviously, appreciate you coming on and talking about your experience with the software. So would love to dive in a bit more on that. You touched on the AI piece. Are there any other kind of features that you would say stand out to you that really kind of help you in your hosting?
Yeah, I mean, I think for us, the biggest things were that we were looking for just the general use case. Can you link all the calendars through all the different booking platforms? Can you sync up all the comms? Can you have it scheduled out? How easy is it to delete any part of that automation sequence? And then after that, also in terms of like just the user interface, as we were looking at other ones, it gets complicated. And especially now, we do have a VA that helps with all of our management. And so it needed to be user-friendly enough to where they could do majority of those tasks with guest interactions and calendaring all through that. So, I mean, that was, we honestly, there's probably, I mean, most of the users are probably like this, but we probably use 10% of the functionality, and it's just the baseline stuff. Although I will say in the last year, the reporting and the dashboard on that has gotten a lot better. So I really appreciate that. That was one thing that I know that wasn't as robust as I wanted it to be, but it's
Mhm.
definitely making strides. So
Good, glad to hear it. So since you're only a 10% user, this might be a tough question to ask. I was going to ask, what else could we be adding? What would improve the tool? Or I guess what would make you use the other 90%?
yeah, I mean, and I say 10% user as in I feel like once you set it, as long as you set everything, like we have all the properties loaded, we use the parent listings, we have the calendar, right? We have all of the communications automated. Um, and so once you set it, I don't think there's much you have to do to keep it updated,
Hmm.
aside from your property updates or rules or whatever there may be. Um, so, I mean, in terms of what I would use it more for, I don't know. I mean, unless there's another part to hire VAs, because that'll always be the hardest part in terms of scaling. If you have some hospitable focused uh, partners that could help add Airbnb, STR support, I think that'd be my vote.
Nice. Okay. Well, maybe more on that soon. More on our marketplace offering coming soon. So yeah, I'm sure that we can help you out at that, Josh, in the near future.
Okay.
Sweet. Cool. So that's kind of enough about us, Hospitable. A bit more back to you. So you kind of touched on it already on new short term rental coming, but what's the future for Josh? What's 2025 look like? What's the plans?
Yeah, I mean, so we are working on a new cabin A-frame that should get launched in March. So that's a new build, our first new construction
Sweet.
project ever. Um, and then aside from that, too, I am looking more towards the assisted living space, just because that was most recently we got into that asset class. It's definitely a high needs. It's a complete it's a business aside from the real estate side, and so is an
Yeah.
STR. But now instead of someone's weekend trip, you have someone's life that's also in your hands. So much more responsibility, much more activeness. I also have a team who is in charge of that. I'm on the marketing side, not on the biz ops on that one, but I'd love to do another one of those deals somewhere here in California. And then aside from that, uh, I kind of want to move more into new development. Just as I've met more operators and I still continually network, the margins from say BRRRR deals to flips to then the new development side is very, very interesting. I know it's a little bit longer of a time horizon, but um, there's definitely still money to be made on new construction. So
Nice. Cool. And so I guess the next obvious question there would be, what are your impressions on where the market's heading in 2025? I guess let's focus on short-term rental. You say there's still opportunity there. Obviously, you're building this A-frame, so hopefully there is definitely plenty of guests going to come and book it. There's obviously increasing regulation in the short-term rental industry. What are your thoughts on where we're going to be in a year's time?
yeah, I mean at this point I'm only buying in places that are already known STR markets with where you have regulations and permits in place. That way you know exactly what to expect. When we were in Joshua Tree, Yucca Valley specifically, we had to hold the bag for 6 months because they redid their entire permitting process, which sucked. So I do not want to do that again. So that's in terms of the permitting process. And I think, with Fed having their meeting in December saying that the rates will relatively stay the same, I think for the most part, there's not going to be any drastic movements. And for me, I'm still thinking about holding properties in terms of decades, not necessarily in the next year or two. So in the next 10 years, I still am very bullish on everything. Although with the current everything, rates, pricing, etc., it is increasingly harder to get the same amount of cash and cash returns as I got earlier in the beginning of COVID. So those are definitely compressed a bit more, but the opportunities are still there for sure.
Sweet. That's a positive trend. I like it. It's a positive note to end the episode on. Thank you very much,
Yeah.
Josh. It's fantastic having you.
Thank you for having me.
Sweet. Thank you very much. And thanks everyone for listening. Thank you for joining everyone. If you enjoyed today's episode with Josh, Please don't forget to like and share the Hospitable Hosts podcast wherever you are listening. Thanks, and we'll see you next time.